Hello CMA final students. I welcome you all for part 2 of transfer pricing. In part 1 of transfer pricing, I discussed till comparable uncontrolled price method. In part 2, we will discuss remaining methods for calculating arm's length price, and we are going to do one problem for each method. Okay. Next, second method for calculation of arm's length price is resale price method. When resale price method is applicable, whenever you buy goods from your associated enterprise and resell in India. In such a case, resale price method is applicable for calculation of arm's length price. Let's say there is one company XYZ Limited. XYZ Limited is buying goods from its associated enterprise. Whatever the goods bought from associated enterprise are there, they are resold in India. Resold in India. So in this case, we are going to calculate arm's length price using resale price method. See, if XYZ Limited buys goods from unrelated party. Okay, if it buys goods from unrelated party and resells in India, then how much is the GP margin? We will take that GP margin. That means from unrelated party, if goods are bought and resold in India, how much is the GP margin of XYZ Limited? We will take unrelated party transactions GP margin, and thereby we are going to calculate arm's length price using resale price method. Are you able to understand? So very simple. Whenever one entity, one company buys goods from unrelated party and resells in India, then for calculation of arm's length price, we are going to use resale price method. Are you able to understand? In unrelated party transaction, whatever the GP margin is there, using the GP margin, we are going to calculate arm's length price. Exactly how to calculate arm's length price, you will understand if we do one problem. Let us do one problem so that you will get better clarity. So you can see this problem in institute material. Illustration 2 in institute workbook, actually not material. Cool Air Private Limited is associated enterprise of Chill Corp Inc. USA. So there are two companies. Cool Air Private Limited, Chill Corp Inc. This is based in USA and this is based in India. In question itself, it was said both are associated enterprises. So Cool Air Private Limited and Chill Corp Inc. both are treated as associated enterprises. During previous year 24-25, Cool Air imported 4,000 AC compressors from Chill Corp at 8,200 per unit and sold them to Chill Zone Limited at 12,000 per unit. So what happened? Goods bought. How many goods are bought? 4,000 units at the rate of rupees 8,200 per unit. Next, what happened? Whatever the goods bought are there, they are resold in India. At what price they are resold in India? For rupees 12,000 per unit. Okay, this is the information. To whom they are resold? Chill Zone Limited. They are resold to another company, Chill Zone Limited. Cool Air also had purchased similar compressors from unrelated party Frostech Limited Germany and resold them at same resale price of 12,000 with a GP margin of 25%. So there is another company, Frostech Limited. Frostech Limited. This is basically a German company and it's unrelated party. Unrelated party. So from unrelated party also goods are purchased and are resold in India At what price they are resold in India for rupees 12,000 per unit. How much is GP margin? GP margin is 25%. Okay, they are resold with a GP margin of 25%. So this is the information. Next. However, Chilcorp provided a special volume discount of 1800 per unit, whereas Frostech provided only 700 per unit discount. So how much is the discount given by functional difference 1? How much is the discount given by related party? Related party gave discount of 1800. Unrelated party gave discount of how much? 700. Additionally, Chilcorp delivered at port without insurance. See, goods are delivered without freight and insurance. That means freight on board basis. On freight on board basis, how much is the cost? Cost is 1400 per unit. So shipping charges. Second functional difference, shipping charges 1400. This is based on freight on board. Here how much are shipping charges? See, in case of Frostech, delivery was at factory, Cool Air paid only 500 per unit on shipping. So how much are shipping charges? 500. And this is based on CIF basis. So one is based on FOB, another is based on CIF. On FOB, freight charges are 1400. On CIF, freight charges are 500. Okay. So here what we will do, whenever goods are bought from unrelated party and are resold in India, how much is his GP margin? His GP margin is 25%. So from related party also, if he buy and resell in India, minimum he should get 25% GP margin. After his GP margin, additional amount he can pay to related party also. But there are functional differences na, discount and shipping charges. We will adjust functional differences and we are going to calculate arm's length price. Okay, now let's do one thing. Let's prepare one P&L account. You will understand easily. How much is sale price? 12,000 rupees. From unrelated party, if goods are purchased and are resold in India, generally how much is GP margin? GP margin is 25%. So from related party also, if he is buying and reselling in India, minimum he should get 25% GP margin. How much 25% means? 3,000 rupees. 12,000 into 25%, 3,000 rupees. See, related party is giving discount of 1800. Unrelated party is giving just 700 rupees discount. So whenever goods are purchased from unrelated party, you will get lower discount, right? When you get lower discount, your price increases. That's what. For example, let's say I went to Bata showroom to buy chappals or to buy shoes. Let's say price is 4,000 rupees. Discount is 300. When discount is 300, my price is 3,700. If discount increases, if discount is 800, okay, then price will be 3,200. So whenever discount increases, price decreases. So here, whenever you are buying goods from related party, discount is higher, 1800 rupees. But whenever you buy goods from unrelated party, discount is only 700. See, whenever discount decreases, price will increase. See, 800 discount, price 3,200. 300 discount, price 3,700. So whenever discount decreases, price increases. Am I correct or not? So when you buy goods from related party, as he is related party, he is giving 1800 discount. Why will unrelated party give 1800 discount? Unrelated party is giving only 700 rupees discount. So whenever you buy goods from unrelated party, your price will increase because lower discount was given. So how much is increase in cost? increase in cost because of lower discount. Lower discount. How much is increase in cost? Related party giving 1800 discount, unrelated party 700 only. So 1800 minus 700, 1100 is increase in cost. That is functional difference 1. Okay. Functional difference 2. When you buy goods from related party, shipping charges are 1400 because FOB basis. When you buy goods from unrelated party, shipping charges are 500 because CIF basis. Correct. So from unrelated party, the basis is CIF. From related party, the basis is FOB. From unrelated party also, if goods are bought on freight on board, basis, how much will be the cost? Cost will be 1400 rupees. That means, see, we need to compare both the transactions. From related party, it is at FOB basis. From unrelated party, it is at CIF basis. If we convert it into FOB basis, that means what? Even from unrelated party also, if we buy goods on FOB basis, how much will be the cost? Cost is 1400. Correct. So how much will be increase in cost if we buy goods from unrelated party on FOB basis? Increase in cost. Increase in freight cost. See, related party CAF basis. Sorry. Related party FOB basis. Unrelated party CAF basis. From unrelated party also, if goods are bought on FOB basis, then cost will be 1400, right? How much will be the increase in cost? Increase in cost is equal to 1400 minus 500. 900. So how much is the maximum amount that can be paid? Maximum amount that can be paid for buying goods from related party, for buying goods, that is nothing but balancing figure. How much is balancing figure? Calculate. 12,000 minus 3,000 minus 1100 minus 900. Arm's length price is 7,000. This 7,000 will be treated as so arm's length price is 7,000 rupees. How much is actual purchase price? Actually, they are bought for 8,200 per unit. Actual purchase price. See, it is sufficient if 7,000 is paid. But how much is actually paid? 8,200 rupees. So how much is extra expense? Extra expense is 1,200 rupees per unit. How many units are purchased? 4,000 units. So how much is total extra expenditure? 4,000 into 1,200, 48 lakhs. So whatever 48 lakhs is there, that will be added to income of S. Okay. I hope you got clarity now. 48 lakhs will be added to income. So very simple, students. When goods are bought from associated enterprise and are resold in India, then for calculating arm's length price, we use resale price method. How will we calculate? We will take resale amount. From that, we will reduce GP margin in unrelated transactions. How much is our GP margin in unrelated transactions? That will be reduced. Then functional differences we will adjust. After adjusting functional differences, we are going to calculate that arm's length price will be compared with actual price. Accordingly, we are going to calculate the. Another important point I wanted to tell you. This is very interesting. Due to arm's length price, Okay, if your income increases or if your loss decreases, then only transfer pricing provisions are applicable. If due to arm's length price, if your income decreases or loss increases, then transfer pricing provisions are not applicable. That means transfer pricing provisions are entirely in favor of income tax department. So, like because of arm's length price, your income increased, transfer pricing provisions are applicable. Because of arm's length price, your loss decreased, transfer pricing provisions are applicable. But because of arm's length price, if there is decrease in your income or increase in your loss, okay, then it is adverse to department. In such a case, transfer pricing provisions are not applicable. Yeah, Preetham doubt is what if both the transactions are on FOB basis? If both the transactions are on FOB basis, there is no functional difference at all. You need not do any adjustment. When will you do adjustment? If one transaction is at FOB basis, another transaction is at CAF basis, then you will bring both at one level. Okay, then you have to do the adjustment. Otherwise, adjustment is not required. I hope you understood this. So did you understand this? Because of arm's length price, increase in income, decrease in losses, transfer pricing provisions are applicable. Otherwise, transfer pricing provisions are not applicable. Next, we will discuss cost plus method. When cost plus method is applicable, whenever you are providing services to your associated enterprise, then you are going to calculate arm's length price using cost plus method. Okay, see, if comparable uncontrolled transaction is available, then CUP method you will follow. If comparable uncontrolled transaction is not available, then you will follow cost plus method. That means how much cost you incurred in providing goods or providing services to your associated enterprise. You will take that cost and you will take normal GP margin in other transactions. By adding that GP margin, you are going to calculate arm's length price. So when cost plus method is used, whenever you are buying, like whenever you are providing goods or providing services to your associated enterprise, then you are going to use cost plus method. What you will do, you will calculate direct cost. You will calculate indirect cost for providing that goods or services. After adding both of them, you will arrive at total cost. To that total cost, you will add GP margin. By adding GP margin, you are going to arrive at arm's length price. Okay. So did you understand? Now we will do one problem. You will get better clarity. Open illustration 1. Galaxy Inc. USA holds 40% equity in Comet Limited, India. So there are two companies, Galaxy Inc. USA and there is Comet Limited, India. In question itself, it was said Galaxy Inc. holds 40% shareholding. 40% shareholding means more than 26% shareholding, right? So both will be treated as associated enterprises. Okay. During 24-25, Comet Limited rendered 2,500 man hours for Galaxy Inc., charging 1,200 per man hour. So Comet Limited provided services. How many man hours? 2,500 man hours. What is the billing? Billed at 1200 per man hour. Okay. Total cost of providing these services amounted to 22 lakhs. So how much is cost? Cost is equal to 22 lakhs. Billing, sales is done at 1200 rupees per man hour for 2500 man hours. Okay. Similar services were rendered to unrelated enterprise Star Limited India with a GP margin of 55%. That means what? In unrelated party transactions, how much is the GP margin? GP margin is 55%. Additional information. Galaxy Inc. provides cloud infrastructure support valued at 10% of GP margin. That means what? Here, Galaxy Inc. provides infrastructure support. Because of that, cost decreases by 10%. Cost decreases by 10%. Tell me one thing, if same services are provided to unrelated party, whether unrelated party gives you infrastructure support, unrelated party will not give infrastructure support. You have to buy the infrastructure. Whenever you buy the infrastructure, your cost increases. Whenever your cost increases, your GP margin decreases. So we need to calculate arm's length GP margin. Okay, shall we calculate arm's length GP margin? Arm's length GP margin. So how much is GP margin in unrelated party transactions? GP margin is, second tell me, 55%, correct? Now, related party is giving infrastructure support, whether unrelated party gives infrastructure support? No. So, when you are dealing with unrelated party, then no infrastructure support. If infrastructure support is not received, then your cost increases. Whenever your cost increases, your GP margin decreases. So for finding arm's length GP margin, that means if the same transaction, if we do with unrelated party, okay, how much is the gross profit margin that we get? That gross profit margin is arm's length GP margin. When you are calculating arm's length GP margin, whatever the reduction, okay, because of increase in cost, whenever you do transaction with unrelated party, your infrastructure cost increases, automatically gross profit decreases. Whatever the impact on gross profit is there, that we need to give. Okay, so our GP will decrease. How much is decrease in GP? Because of infrastructure cost. How much? 10%, right? 10% of GP. How much is 10%? 55 into 10%, 5.5%, correct? Next. Galaxy Inc. is given a 60-day credit period. Cost of this extended credit is 2% of the billing rate and it is not given to unrelated parties. So what do you mean by this? Galaxy Inc. is related party, right? For related party, 60 days credit period was given. Okay. For unrelated parties, will Comet Limited give credit period? For unrelated party, no credit period. No credit period. That means what? For related party, 60 days credit period is given. For unrelated party, no credit period was given. Whenever credit period is given, interest cost will be there. Interest cost will be there. Interest cost increases. Whenever interest cost increases, gross profit margin decreases. But whenever you do transaction with unrelated party, you are not giving credit. Immediately you are getting money. Are you giving credit? You are not giving credit. If you are not giving credit, there is no interest cost for you. So interest cost decreases. Whenever interest cost decreases, GP margin increases. Are you able to understand? Interest cost decreases and GP margin increases. So how much is the increase in GP margin? Add increase in GP for not giving credit period. For not giving credit period. How much is given here? 2%. 2%. 55 into 2%. How much? Calculate. 1.1%. So how much is arm's length price? 50.6%. Okay. I think it's correct. Yeah. So arm's length GP margin. Arm's length GP margin is 50.6%. Okay. So we will take total cost. How much is total cost? It was given 22 lakhs, right? Total cost is 22 lakhs. For 22 lakhs, we need to add GP margin. Add GP margin at the rate of 50.6%. How much? 11 lakh. Hold on. Generally, GP margin, what is the formula? Formula for GP margin, gross profit divided by sales into 100, correct? So, if sales are 100, GP margin is 50.6%. How much is cost? 100 minus 50.6. Cost is 49.4, correct? So 49.4 plus 50.6, exactly it will be 100%. So shall we calculate GP margin doing cross calculation? Just give me 1 second. So now tell me how much is GP margin? 22 lakhs divided by 49.4 into 50.6. How much? 22 lakh 53,441. In that case, sales will be 22 lakhs plus 2253,441. 44 lakh 53,441. That will be considered. So how much is arm's length price? Arm's length sales. Arm's length sales are 44 lakh 53,441. How much are actual sales? Actual sales. You can calculate 2,500 man hours into 1,200 per man hour. 2,500 into 1,200. Much? 30 lakhs. See, here underbilling was done. If you do underbilling, your sales will decrease. Automatically, your profit will decrease. That's why underbilling was done. So, how much is underbilling, under sales here? Under sales are 14 lakh 53,441. Whatever the under sales are there, that will be added to sum of. Now, did you understand how we do under cost plus method? For related party, how much is our direct cost? How much is our indirect cost? You will go to unrelated party and check how much is GP margin charged by unrelated party. Whatever the GP margin charged by unrelated parties is there, that will be considered in calculation of. I hope you understood. Shall we go to the next method? Profit split method. This method will be interesting. How to profit split. Sir, when profit split method is used for calculating arm's length price. Generally, whenever two or more companies internationally come together and do business, whenever two or more companies enter into joint venture internationally and do transactions, then we will calculate combined profit. Whatever the combined profit is there, such combined profit will be divided among the entities, among the parties of the joint venture on the basis of contribution. That means how much effort is given by each entity. Based on that effort, we are going to divide the profit. Original profit sharing ratio, that is not relevant. What is relevant for us is how much effort was made, contribution was made. Based on contribution ratio, we are going to divide the combined profit and we are going to calculate arm's length price. Are you able to understand? For example, you know about Honda Limited, right? Honda Limited is basically Japanese company, and there is Hero Limited. This is basically Indian company. Both entered into joint venture Hero Honda Limited. Okay. Now what they are doing? Joint venture is Hero Honda. Now Honda Limited will give intangibles. Okay. Hero Limited will do manufacture. And then they sell bike in India. So here Honda from Japan, Hero from India, both are entering into joint venture internationally. Honda is giving intangibles, Hero is doing manufacture of bike and they are selling bike in India. Now on sale of bikes, we are going to calculate combined profit. Whatever the combined profit is there, that is to be apportioned between Honda Limited and Hero Limited based on effort kept by each entity. Okay, whatever the profit sharing ratio between Hero Limited and Honda Limited, that is not relevant for us. What is relevant for us is contribution. How much contribution is done by Hero Limited, how much contribution is done by Honda Limited. Based on that contribution, we are going to divide combined profit and we are going to calculate arm's length price. Are you able to understand? Now, let's do one problem. We will automatically get clarity about calculation of arm's length price in case of profit split method. Shall we do? Yes. Intech Limited, an Indian company, designs and develops proprietary solar powered drone. Its Singapore subsidiary, Skytech Pte Limited, develops advanced navigation software that integrates with the drone. So there are two companies. Inditech Limited, Skytech Pte Limited. Intech Limited is basically Indian company. Skytech Pte Limited is Singapore company. And its Singapore subsidiary. So in question itself said it is subsidiary. Subsidiary means more than 50% shareholding. The moment it is more than 50% shareholding, both are treated as associated enterprises. Correct? Next. Preetham, listen, you will understand this concept superbly. Okay. So what Intech Limited will do? Intech will develop drone. That means basically Intech Limited will manufacture drone. Manufacture drone. For this drone, navigation software that will be given by Singapore company. Navigation software that will be given by Singapore company. Intech manufactures and supplies the drone hardware to Skytech. Skytech integrates the software and sells final product to unrelated customers. So what Skytech Limited will do, after adding software, finished drone will come. That finished drone will be sold. That finished drone will be sold. Sold by Skytech. This is the scenario. Due to uniqueness of technology, no direct comparables exist. Traditional methods like CUP, TNMM are not reliably applicable. However, comparable market return for routine manufacturers without intangibles is 12% on manufacturing costs. That means what? Very simple. For example, both did not enter into joint venture. For example, it will manufacture drone only. It will manufacture drone and it will sell only hardware in India. If hardware in India is sold, how much is GP margin? The gross profit is equal to 12% of cost. Okay. Similarly, Skytech PTE Limited also. It will not manufacture a drone. It will sell only navigation software. Okay. On that sale, how much is GP margin? GP margin is equal to 12% of cost. That means without assembling, without combining, if each part is sold independently, okay, if hardware is sold independently, if software is sold independently, how much is the GP margin? GP margin is 12% on cost. Okay, that means individual level, if each one is sold independently, independent GP margin is 12% of cost. Next, other data was given, available financial data. Sales to third party, that means drone is sold for 3000 rupees. How much is manufacturing cost? 400. And manufacturing cost of hardware is 400. Manufacturing cost of software is 500. Next, development cost means what? Research and development. Okay, that means initially for developing hardware it costed 150 rupees. For developing software it costed 100 rupees. Okay. Next, operating cost means nothing but admin expense. Admin expenses are 100, 200. So overall total cost is 1450. Combined profit is 1550 rupees. Okay. Now we will take combined profit. From combined profit, we are going to apportion that combined profit based on contribution. Okay. But here there is one small explanation. Listen for next 2-3 minutes. You will understand. Okay. Now tell me, how much is combined profit? Combined profit 1550 rupees. Now, from combined profit, individual profits are to be reduced. Only balance combined profit is to be apportioned. Are you able to understand? How much is individual profit? Individual profit of Inditech Limited. How much? Individual profit of Intech Limited is 12% of cost. How much is cost of drone? 400, right? 400. So 400 into 12%. 48. That will be reduced. Next, individual profit of Skytech PTE Limited. How much? It is also 12% of cost. How much is cost? 500, correct? 500 into 12%. How much? 60 rupees. So how much is balance combined profit? Balance combined profit. 1442. That means what? See, Everyone can do their own business. Honda can do its own business. Hero can do its own business. Honda can sell only intangibles. Hero can sell only hardware. Here also, Inditech Limited can only sell hardware. Okay. SkyTech Pte Limited can only sell software. On sale of hardware, GP margin is 12% of cost. On sale of software also, GP margin is 12% of cost. So whatever the individual GP margin is there, that individual GP margins are to be reduced. Whatever the balance combined profit is there, this balance combined profit is to be apportioned between Inditech Limited and SkyTech Limited, SkyTech Pte Limited, based on contribution ratio. Okay, based on contribution ratio. That means to develop that drone, how much is the effort kept by Inditech Limited? How much is the effort kept by SkyTech Pte Limited? See, generally effort means what? Research and development. How much research and development was done by? How much R&D was done by Inditech? Inditech has done R&D of 150, correct? SkyTech has done R&D of 100. So how much is the development? R&D effort kept is 150 is to 100, correct? So here contribution ratio is 150 is to 100. Based on that contribution ratio, we are going to apportion the combined profit. So 1442 into 150 divided by 250. How much? 865.2. Here 1442 into 100 by 250. How much? 576.8. See, two levels of profit. First level of profit is at individual level. If they are sold independently, how much is the profit? Second level of profit is combined profit. That combined profit is apportioned based on contribution ratio. Okay. Now, we are going to calculate arm's length price. Shall we calculate arm's length price? Now, tell me how much is variable cost? See, whatever the development cost is there, development cost is not variable cost, correct? But that will be apportioned on each product, that amount will be apportioned. So how much is total cost for Inditech Limited? Total cost is 650 rupees. Total cost. Total cost of hardware 650 rupees. If that hardware is sold independently in India, how much is the GP margin earned? If it is sold independently, GP margin earned is 48 rupees, correct? So add GP on sale in India. How much? 48 rupees, correct? GP on sale in India, 48 rupees. And how much is combined profit, apportioned combined profit? Apportioned combined profit is 865.2. Now how much is arm's length price? 650 plus 48 plus 865.2, 1563. Okay, that will be considered as arm. Now did you understand profit split method? Very simple. Cost. For total cost, you will add two profits, individual profit and apportioned combined profit. After adding two profits, you are going to arrive at arm's length. I hope, Preetham, now you are very clear. Next, last, we are going to discuss TNMM method, transactional margin. in class you had some issues with me, but I hope with this profit split method is very clear for you. Next, transactional net margin method. See, cost plus method, transactional net margin method, more or less they will appear very similar. But the difference is, in cost plus method, we will take GP margin. In TNMM method, we will take net profit margin. Okay. See, every time we do not know GP margin. Sometimes we are going to take net profit margin. Okay. See, we rely on certain websites for GP margin of the industry. However, many times in those websites also, whatever the data available, it will not give gross profit margin, it will give only net profit margin. So sometimes based on net profit margin, we are going to calculate arm's length price using transactional net margin method. Are you able to understand? So what you will do, whatever the cost that you have incurred for providing services to your associated enterprise, take that cost, whatever the net profit margin that is levied by unrelated parties is there, add that net profit margin and thereby you calculate arm's length price. Okay, so let's calculate, let's do one problem with regard to transactional net margin method. You will easily understand. Actually, in CMA workbook, no problem is not available with regard to TNMM method. So I am going to discuss now. I am going to discuss now in this in my material. Please see. Yeah, question number 24. I request everyone to open question number 24. Yes, please open question number 20. ANS INC has its business in Malaysia, has advanced a loan of Malaysian dollars or Malaysian dinars 1,60,000 to ANS Limited India. So there are two companies, ANS Limited, ANS INC. So how much loan is given? 1,60,000 Malaysian dollars. Book value of total assets of ANS Limited was 125 lakhs. So how much is book value? Book value of total assets. $125. Now here at the end of the question, it was given 1 Malaysian dollar is equal to 45 rupees. That means convert into Indian rupees. How much loan was given? 1,60,000 into 45, 72 lakhs loan was given. Do percentage, how much percentage of loan was given? Percentage, 72 lakhs divided by 125 lakhs into 100. 57.6%. That means more than 51%. Correct. If more than 51% loan is given, then sorry, if more than 51% of assets amount is given as loan, then both will be treated as associated enterprises. Correct. Now, next. ANS Limited provided software backup support to ANS INC. ANS Limited has spent 50,000 man hours during financial year 24-25 for services rendered to ANS INC. So, How many hours of service is provided? 50,000 man hours. How much is cost? Cost is 75 Malaysian dollars per man hour. 75 Malaysian dollars per man hour. How much is billing? Billing is 90 Malaysian dollars per man hour. Okay. Sorry, 90.75. I am very sorry. Same, this type of clerical mistake I have done in previous problem. After entire calculation, I realized this clerical error. So that's why now I have my student Priyatam. He is going to rectify all these mistakes, but he did not reply to this. Next. Gamma Limited in India, which has similar business model, provides software backup support to Olive Inc. in Penang, Malaysia. Gamma Limited's cost and operating profits are as under. So how much? Direct cost 600, indirect cost 200, operating profit is 200. So can we calculate operating profit margin? We can calculate. So in case of Gamma Limited, it's okay, Priyatam, don't feel bad. I just casually said. Operating margin as a percentage of cost. As a percentage of cost. How much is operating margin? Operating margin is 200 rupees. How much is cost? Cost is 800 rupees. 200 by 800 into 100. So how much is operating margin as a percentage of cost? 25%. So what we will do now? We will take total cost. To total cost, we will add GP margin. Thereby, we are going to calculate arm's length. Okay. Now, how much is total cost? Shall we calculate total cost? Total cost is equal to 50,000 man hours into how many Malaysian dollars? Cost 75 rupees, correct? 50,000 into 75. 37,50,000 Malaysian dollars. Correct. To this we will add GP, gross profit, and it is as a percentage of cost. You can directly apply GP at the rate of 25%. How much? 9,37,500 Malaysian. So how much is arm's length price? Arm's length price is 46,87,500 Malaysian dollars. How much is billing done? Billing 50,000 man hours into 90.75 Malaysian dollars. 45,37,500 Malaysian. So that means under sales were done, under billing was done. How much is under billing? Under billing is 1,50,000 Malaysian dollars, correct? Now convert under billing into rupees. Here under billing is in Malaysian dollars. Now calculate under billing in Indian rupees. How much? 1,50,000 into 45. 67,50,000 rupees. Correct. So somewhere it went wrong. Yeah, 67 lakh 50,000. That's the arm's length. I mean, that is the addition of income. Whatever the underbilling is done, this 67 lakh 50,000 will be added to income of S. Okay. So this is about transactional net margin, CNMM. Next, advance pricing agreement, rollback provisions, secondary adjustment, section 94B, very, very important, thin capitalization, amount of interest payable to associated enterprise. These concepts I am going to discuss in revision lecture part 3. Okay.